Let me remind you that trading is risky, not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of future results. Please stay small, stay humble, focus on the long term, and never risk money you cannot afford to lose. Let's go! G'day, mate. Hello, my name is Wayne McDonald. I am the Chief FX Market Strategist for TradersWay.com. Thank you very much for attending today's webinar. Today we'll cover dollar pairs, yen pairs, gold and oil, and anything that you want to cover. Just get involved, ask questions. Thank you so much for being a subscriber of the Forex.Today YouTube channel. This is all brought to you by Traders Way, so please pay it back. Without Traders Way, these webinars would not be going on for you. So the way you show your loyalty and respect and pay it back is by visiting TradersWay.com and opening up a demo account. Once your account is open, it takes 30 seconds. Go into the back office, download MT4, and then come back here. In the link just below the video, there's a link just below the video. And if you click that, that takes you to a download page. So you can download my chart templates. You can install them onto your Traders Way MT4, and your charts will look like mine. Pieter, okay. Send me an email, wayne@fxbootcamp.com, and we'll figure it out. Okay, wayne@fxbootcamp.com. Get you taken care of. All right, you ready to go? Boom, ciao. Today's going to be the day I trade FX with you. By now, you should have somehow realized what you got to do. Okay, so where are we? We're kind of in nomad's land on a monthly basis, right? Here's the central. Here's the S. We're not really doing anything of interest. So hard to make anything of it. Are we behaving technically? Well, here's the buy zone, and here's the target, and we kind of hit that. Do you remember talking about this? I said it probably would even do an Arctic turtle. Didn't even really do that. So we hit, I wouldn't even say good targets. It sort of did what it was supposed to do, which means the market doesn't really know, or we're waiting for information, or such. A bull is going to treat it like this, okay? And they're going to use this area clearly as the roll reversal, okay? But we're losing a lot of momentum, which is fine. What are the black and gray lines? Those are pivot points. So anyways, yeah, we got to get you on board, Pieter. Yep. So anyways, I look at it, and it's mass mediocrity. I don't know if you want it, if that's what you want in your life, but you could still mark things up. I mean, it kind of did what it was going to do, but look how tight next week's pivots are. right? So, wow, wowzer. Okay. All right. Do you guys remember this gold? We were bullish, but I said it would come down to the blue area. Oh, gold is falling down to the blue area. Cool. Now what? Well, now if you're a bull, now you have permission to consider buying it. And you too, Jermaine. Thank you. So that's what a bull's going to be thinking about. That's pretty cool, eh? After that giant move, it's just nice to stay calm. Say, oh yeah, it's going to come back. Oh yeah, it always comes back. So now what? Well, if you're a bull, that's what you're thinking. So up and hopefully a higher high. And a bear would be thinking more like, I suppose, if you're going to do a shorter term trade like next week, you might be thinking up and down. I think it's too early to plan this, but you certainly, that could be on someone's plate. I think to turn a bullish trend around, though, you're going to need a proper reversal pattern. With all due respect. But anyway, so very cool for the bulls. Remember, up, consolidate, up, consolidate, up, consolidate, up, consolidate, and then up. Could be a rabbit, could be. What do I use for my freehand drawings? I use something called Snagit. Okay, nice, right? It's called Snagit, and you can also, hang on. Oops, let's move it over here. And there's also this where I can go snap, right? And I can take an image and then I can upload that as like a trade plan. Oops, well, anyways, right? Nice, right? Cool. Cool. So anyways, that's gold. Looks like an opportunity if you're a bull. If you're a bear, you're at support. WTI. My, oh my. WTI. This is what I watched yesterday. It's very, very closely. Nice. It's only 50 cents, but easy peasy lemon squeezy. Took like all afternoon for it to come down into our buy zone. Very, very cool. How you insert on MT4. It's not on MT4. So I don't know what version. This is the newest version of Snagit. And it just sits under the window. But it's not on MT4. So again, this is a terrible place to buy. you missed it all afternoon, and then all, I guess all night. But then if you are a bear, you're not selling this, but you're waiting for a sign that a double top has taken place, right? And somebody 2 days ago, I guess, was expecting this to come down. I said, well, if that was true, there was plan number 1, plan number 2, plan number 3, plan number 4, plan number 5. Remember, like if oil comes down, the stock market would go down, the bond market would go up, right? That kind of stuff. Yens would go up, Swissy would go up, Aussie would go down. Remember that kind of stuff? So anyways, that hasn't happened yet, of course. The trend is your friend until it betrays you and stabs you in the back. How do I select the targets? I'm not sure if I understand your question, but generally speaking, targets are going to be based on trade plans. Trade plans are going to be based on support and resistance. All right. So that's our bullish target. You could throw in Fibonacci and all that kind of stuff too. Yeah, whatever. Okay. That's the target. Now, I would have thought that this would have hit the target earlier in the week and then come down, but because it hasn't done that, I think it's sort of building a top. Okay. But right now, it's still bullish. Very cool. Okay, just doing its thing. Very, very nice. Thank you, WTI. I love you, WTI. Okay. If anyone was trying to set up an inverse head and shoulders, now's your sort of plan. Gold. I did it, Pharaoh, like 4 minutes ago, Pharaoh. Pharaoh. Yeah, so Brooke's going to play more like down and proper double bottom. I'm okay with that too. To me, it's all the same plan, right? So in that case, right, that's like plan A, plan B. Okay. And that actually tells me, so like if you're going to do it that way, Brooke, yeah, I'd be front running a short, and then I'd be looking for, by the end of next week, I'd buy it for quite some time. So that tells me in March, if that is true, oil will fall, SP 500 will fall, ten-year notes will rise, yields will fall, right? US dollar will go up, Aussie will go down, yen will go up. You see, it's just macroeconomics. So it's all intertwined. I like to describe it as Newtonian physics, where it all works together like clockworks. Yeah, that makes sense, Brooke. Good work. Love it. What's up, IS? Good morning. What's it? Jan says, with U.S. becoming the largest producer and exporter of oil, may higher oil prices start to create stronger dollar. Well, you're contradicting. So if we have a new swing producer, so it used to be Saudi Arabia only, but now it's US of A and Saudi Arabia. So if anything, what that does, okay, is move supply from, this is supply, this is demand, okay? It increases supply, so the quantity is here, Q1, okay? Supply increases because now we have more producers, right? So we have more oil in the market. That means we go to Q2. So as you can see, we increased. So let's just make numbers. We used to have 1, 2, the equilibrium used to be 3, but now we have 4 barrels of oil, whatever. Quantity has increased because we have more producers. But therefore, check this out. We used to be at price 1, but now we're at price 2 based on the equilibrium, and price has fallen. So more producers, we've gone from an equilibrium of 3 to 4, so quantity has increased, but price has fallen. Okay? Okay. FX Mod says, how do you get started with fundamentals? Well, you go to fxbootcamp.com. There's an entire fundamentals course that I think is, 15 hours long, maybe more. And by hour 5, you will be managing the balance sheet of a corporate bank. And then once you understand how to manage the balance sheet of a bank, you are taught how the Federal Reserve banking system works. You start doing the money multiplier, you start doing all kinds of stuff, so that you understand things like quantitative easing, discount rates, prime rates, rate on the 10-year T-note, all that kind of stuff. Because therefore, you need to understand monetary policy. If you're a currency trader and you don't understand monetary policy, oy vey, huh? So that's where you go, FX Mod, fxbootcamp.com. You can also go there to learn everything else, but certainly fundamentals. All right. So, anyways, there's that. If A or B happens, you got about 9 trades you can take. What's up, Exy? And just a hint to all the new people, if you go to the download link at the bottom of the YouTube video, and it says download my chart templates for free, not only are you given my chart templates for free, it also makes you a very generous offer for FX Bootcamp training courses. Coupon! Coupon! So maybe you'll figure that out, save some money as well. Well, Joshua, it wouldn't be the size of the balance sheet that impacts the market now. Creating the balance sheet, right, would have affected the market. And then selling, right, trimming down their balance sheet would affect the market. But the balance sheet in of itself does not affect anything. Oh, XXZZZXXX, you don't have a computer? You only have a phone, huh? Okay. So anyways, let's go back to Kiwi. We were talking about treating this as topish, right? If you remember, we had last week's target achieved. We have this week's bearish entry, and it took a while to turn this around, and we've come down, and all we did was hit the bullish area. I mean, it's way late, right? But if you wanted to be a bull, this is part of a front run. So plan on being long for 3 or 4 or 5 days, but notice how this is contrary to what some people are saying with oil. If this is going up, oil's going up, not down. Oh, right on XXXZZZ XXXX227. Your birthday must be coming up, huh? Yeah, 5 days. So that's interesting, right? So there's clearly a setup for a front run, but you know, look at what these pivots are telling us. You know, there's not a lot of juice left in the orange, you know? You know what I'm talking about? Like, no, I have no idea what you're talking about. So anyways, just be cautious and be careful. Let's do Kiwi dollar, and it's even less lovely. Just sort of like it, you know, I guess the only thing to squeeze out of this is notice that the market is intelligent. This is the exact price bears want to sell. This is the exact price bulls want to buy. Everyone else is losing money. Notice that a bull is making money and a bear is making money. Now, they're not making a lot of money, but they're not losing money. They're making money. And everybody else in the middle, at best, is break even, at best. But you know, if they're not entering proper trades, they're losing. Right? Right? You see that? So if you just did your job, for crying out loud, you'd be safe. Now, you may not make money. You may move your stop to break even, but one of these is probably going to make money. But it's even possible that nobody makes money, right? But these are definite, these are absolute entries. Meaning, if you're a bull, right? Statistically, you have what? 1 means you 100% of the time you enter long, right? Or 0%, right? Is 0% of the time you enter. And so typically when you look at trades, and you know, if it's 1, it's absolute, meaning absolutely 100% of the time, right? There's no subjectiveness, so to speak. But what's your sort of confidence level of entering here if you're a bull? And that's 100. This entering as a bull on this black line, the central, is maybe not even 0.5. Maybe it's 0.5. So this is twice as good as this price. All right, because a bear would be a fool to sell here. But a bear, right? But a bear can sell the central just as much as a bull could buy the central, right? So that's the interesting thing about the centrals. It's really not that important. This, if you're a bear, you have to sell it. Otherwise, you're not a bear in my book. Or you just don't know how to swing trade. Or if you're a bull, that's your bull buy. That you buy that. If you get the opportunity to buy that, you buy it. I mean, that's what you do. Right? So if you did what you were supposed to do and sold here, or you did what you were supposed to do and buy here, look, both are making money. Okay. Someone tried to sell it up here this week, which is good. The target was here. Just hasn't really worked out. Notice we're caught on the S. So this will probably work its way into an S1, R1 type inside week. And so we'll just have to let it break. Boom. What do you think of that? Okay. This is pound yen 15-minute chart. So we're missing information here. Would it have been helpful to you if you knew a week ago, let's say, days ago, let's say, you knew like this was the projected top for the market, that it probably wouldn't go higher than that? See, as pretty as it is, I mean, price action is cool and such, but that's what pivot points tell you. That was the projected top. That's cool. And again, whenever the week started, so let's say the week started here, what pivots tell you is take your profit and run when you're in here. This says get out. And you could have done it even days ago, and now that it's falling, you're like, yeah, that was a great one. Yeah, that was great. Good while it lasted. Infinite Solutions been short since Wednesday. Yeah. See? We knew this days ago, guys. Days ago. Days and days ago. We were here, and we knew that this was the take profit zone here. So imagine all the people that just didn't know. Michael, are you upset? Okay. That's the power of pivot points. It's a leading indicator. That's why you must use them. Some people are just sitting there flopping around. They have no idea what's going on. Some people, I mean, think of it. How many people have done this where they've bought more? Right? And yet you could have been out of this Tuesday or Wednesday, just walked away. And do you remember what I said? The virtue of either getting out of a losing trade or just simply getting out of the, when you're supposed to. The virtue of that is that you start looking for new good trades. And that if this was a losing trade, let's say you shorted this, and now you're up here and you're losing money like crazy and you're praying and all that kind of stuff. You've missed 6 other good trades and you're still squirming around worrying about your one stupid loser trade. And it's a waste of everyone's time. Yeah. Oh, okay. Oh, I see. So that's the beast. Okay. Lacking direction here as well. Okay. Remember, I'm very open-minded. I'm very open-minded to yen strength in March. In fact, we talked about it 6 months ago. Not that it's going to happen, but it definitely can. Does anyone know why in March I'm open-minded to the Japanese yen getting strong? What is it, the stock market, or like, what is it? Yeah, there you go. You know what? Like 10 years ago, maybe even 5 years, well, no, but certainly 10 years ago, nobody knew that. Well, infinite solutions, that's kind of personal. Well, you guys are absolutely correct. Yes, well, Jimmy, yes, there's a false rally generally around the 3rd week, and we got our false rally in the 2nd week. And by false rally, like, let's say you're looking at the S&P 500. The S&P 500 was up for, oops, I'm still drawing in white. Let's change it here. Let's go back to red. The S&P 500 had been, hang on, let's try this again. They've been going up for a very long time, right? And then we had that big move down. And then in the 2nd week of January, we're moving up. But we're inching closer and closer to a double top. But a failed rally, as I discussed, is up to but not higher than a double top. The problem with this year is most of it happened in basically a day. What I expected to happen in a month happened in a day. And then, you know, so we got like this crazy sort of, this is kind of what the market looked like. So the thing is, if we're near a double top now, you know, then the downward move should happen in the next 2 weeks. Right? Now, there's a lot that could possibly mess that up. I think the biggest thing is the U.S. and China doing a trade deal. Now, they don't even have MOUs done, but they look pretty serious. But is that going to happen between now and April 1st? Yeah, you know what? They might sign a deal, and I would expect that to create a big stock market rally in the face of what we're planning. But the thing is a plan, and what happened last year, past performance does not predict future results, right? Okay? So very often those types of things happen. Money repatriating back to Japan, that can have an impact for sure. If the stock market drops, that definitely right? If the stock market drops, that definitely strengthens the yen, right? So I have this in the back of my mind that this sort of sideways movement we've been having for a month is sort of this pressure building up. So I think what happens next week is going to be quite important. Be interesting if we can get this to triple top and then drop. I might take a shot. Yeah, but Azabu, I don't care about any of this, that kind of stuff. I just look at what actually happens in the real world. So, you know, for example, is Sony going to pay taxes this year? Yes. Is Mitsubishi going to pay taxes this year? Yes. Is Fujitsu going to pay taxes this year? Yes. So anyways, CFOs of Toyota and Honda and every Japanese company you can think of. Every Japanese company has someone in charge of the money, and all those corporations need to pay taxes. They need to make decisions. They need to move money around. Some want to pay taxes this year. Some want to defer to next year and all that kind of stuff. And it comes down to money moving. So just imagine, we know between now and the 1st, money will have to move. What we don't know is how much. But it very often is enough to impact the market. Okay, cool, right? I know. No, I'm not, but I know of it. All right, let's open it up to questions. Does anyone have questions? Check that out, guys. That's like 2 years of pound yen. Swissy yen, really, Jan? Huh. So that would be a pair I would never trade. Oh, I shouldn't say never, but fundamentally makes no sense to me. But yeah, we could look at it technically. I don't know why you would want to do that. Did I Swissy yen? Look, I've killed my Swissy yens. So I'm going to have to reload this as Swissy yen. So is there any particular reason why you would want to trade Swissy yen? Are you like in Switzerland or something? Jen? They're targets. They don't tell you anything except where to get in and where to get out. But as far as being a bull or a bear, it doesn't tell you that. Jen says double tapping front right. Oh, so you're just trading it purely technically, huh? All right. I guess so. To me, it's like playing the flute underwater or something. But sure. Neat party trick. Yeah, it's a double top. So if I sold this, though, this would be my target. I'd be in it for days. Tax that for days. Yeah, I think so, PJ, but, you know, let's keep things in reason, right? Yeah, Jimmy, fxbootcamp.com. So anyways, yeah, you could do it that way. Yeah. But see, the reason it doesn't make sense is, let's say the stock market falls. Oil falls. Okay, for example, what happens to, let's say, well, let's just say, what happens to the Japanese yen? That would rise. What would happen to the Swiss franc if the stock market fell? That would rise. So, like, both these would be strong. It's like it doesn't make any sense to trade them against each other. Very, very, very often, they're either both going to be strong or both weak. And if you're trading them against each other, one will be strong and one will be stronger, or one will be weak and one will be weaker. But just by definition, there must be a better trade. So you might be making 50 pips here, but you threw away a 200 pip trade somewhere else, right? Like an Aussie yen would probably make you more money than and Aussie Swissy, right? I'd rather you do Aussie yen short and Aussie Swissy short. Which one's going to make more money? Well, Aussie's going to be the same. Aussie is Aussie. So if one of these, if the yen is strong and the Swissy is stronger, or vice versa, one of these will make good money and the other one will make great money. But to trade them against each other sort of validates the rules of relative strength. Stern says Bitcoins are going to make them more money. Yeah, but there's nothing like throwing just a pile of cash all over a bed, jumping on it, rolling around naked in it. You're like, look at all this money. Can't do that with Bitcoin. Yeah, Alex, but still, Alex brings up that because Swissy pays you to borrow and all that. Yeah, but you're still like, just dollar pays you way better of a spread than that, right? So Ricardo's been buying it. Great. I'm just saying, if you're making money there, you skipped other currency pairs that were making you more money. So it's not that you can't make money. It's just, it doesn't fundamentally make any sense. No. Peter, no. My God, Peter. Yeah, you need to join FX Bootcamp. That's not, no, no. Yeah, no, 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 no. Stop trying to figure it out. Just do the course, dude. You're smashing your head against a brick wall, dude. There's no reason for it. Don't worry about it. You're already joining, so don't worry about it. Just relax. Just relax, bro. Relax. So anyways, yeah. So there's your Swissy yen. Any other requests? Ricardo, how does one know? Let me see. Yeah, I love swing trading, Ricardo. Yeah. So Swissy yen was the first option. Yeah, well, it's just at best it's mediocre. It makes no sense to me to pair two strong currencies together or two weak currencies together. Your job is to do relative strength and pair the strong versus weak. Okay. So, it'd be very rare that something is happening on that's worth trading. Pound yen we already did. Pound dollar we already did. Aussie CAD, another very similar one. All right, so let's go there. And I don't even have it. So you trade stuff that I don't even trade. So let's change this now. Aussie CAD. Let's do it this way. So I got to find Aussie CAD. There we go. Aussie CAD. So what kind of currencies are Aussie and CAD? How would you classify them? For example, some countries are importers, some are exporters. What kind of currencies are Aussie and CAD? Commodity. Are they commodity importers or commodity exporters? They're commodity exporters, guys. Okay? That being said, they have their own governments and their own economies and all their own decision maker and stuff. But from what you know, do the Australians and the Canadians, do they have similar governments, or do they have like radically different governments? Because, like, would it be fair to say, Australia is an exporter of commodities, but so is Nigeria, right? And Nigeria doesn't, I don't even want to spell it. That sounds bad. And anyways, no, you wouldn't compare Australia and Nigeria. Populations are different. Nigeria is the most populous country in Africa. Average age now is 18. Amazing. But like the political structure and all that kind of stuff, the maturity of the economy, completely different. But Australia has what? 25 million people. Canada has what? 25 million people. Both are democratic. Both are based on the British system. They both have parliaments. They both export natural resources. You're like, wow, there's a lot of similarities. Okay? And what I'm boiling this down to is, okay, they are different governments and they do have different budgets and stuff, but they're not radically different on the surface of things. And we're trying to look at things from a distance. So that's all you see. And we see macroeconomics. So now we're looking at the globe as an aggregate. We're not necessarily just looking at Aussie, and we're not just necessarily looking at CAD. So we're asking ourselves, is global economics good, bad, indifferent? Is it getting better? Is it getting worse? And by answering that, for example, if the global economy is half decent and getting better, then there's growth. Okay? And we represent that this way. Let's see if I can figure out a way to draw this. Okay. Okay, this is Y bar. What is Y bar? Y bar equals potential global GDP. And then we have to look at cycles. Okay, are we above or below? And so the first thing is like, how's the economics? And we're like, okay, so we're here, let's say. Or let's say, I guess we'd be here. And we're expecting to go here. Okay, so the market is not falling apart. And we could even be below potential, moving back toward potential is probably even smarter. So yeah, we're probably more like here. We're working our way up here. And if that's true, where I guess I didn't fully label this. This is Y. This is actual GDP. And this is Y bar potential GDP. So if you're like, okay, globally, we've just made it through the financial crisis. Some economies like the United States have recovered. Europe and England are battling some stupid war. I have no idea what they're doing. And, we're kind of bumbling away as a planet. We're kind of just bumbling our way through things. But it doesn't, at this moment, you wouldn't look at it like we're not moving. Things are not getting worse than the 2007 financial crisis, right? So maybe we're down here near the trough, and maybe over the next 10 years, things will improve. Okay, if so, the economy is going to need energy, for example, right? It's going to need resources. So for example, if you're going to build a skyscraper, you need steel. Steel is made out of iron and coal, carbon. Coal, my spelling is bad today. Iron and coal, okay? These happen to be Australia's two largest exports. Yes, I do odd, right? So we'll do it this way. So if China is chugging along, they're going to need iron ore and coal to make steel. So things like skyscrapers, but also automobiles. And whatever you need steel for, you're going to need iron ore and coal. Australia has lots of it. But China may need energy, right? So they need coal, but they want clean coal because the coal they have is dirty coal. Well, Australia also has incredibly beautiful coal. So they buy it from Australia. So on and so forth. So if China is benefiting from improving, or let's say decent global macroeconomics, where the world is buying stuff from China, China's got to buy stuff from Australia to make the stuff to sell. So money goes from, let's say USA to China, then China sends it to Australia, right? And so we have a weakening dollar and a strengthening Aussie. Okay, and because China's getting rid of the money, also a weakening RMB or right, or yuan, right? And that's global macroeconomics. So now Australia is rich, right? So they buy the S&P 500, right? And they, so on and so forth. But anyways. So what I'm getting to is the way I plan or analyze my macroeconomics. I ask myself, are they improving? Okay, or what is potential GDP? What is actual GDP? Where are we in the cycle? And how will that impact the foreign exchange market? And if I'm boiling everything down to this one idea, macroeconomics improving, or like in here, macroeconomics worsening. If that is, let's say, the basis of most of my decisions, then I'm either buying Aussie, or I'm buying CAD, or I'm selling Aussie, right? So I'm either buying both, or I'm selling both, but I'm rarely buying Aussie and selling CAD at the same time. It just, based on my type of analysis, it just doesn't even make sense. It's like the Swissy yen thing. I'm like, that doesn't make sense. Why would you play a flute underwater? You're not even going to make sound. Like, what is the point? Right? But all that being said, can you trade this pair and make money? Oh, yeah, sure, yeah. But very often, if you're making money here, you could be making more money somewhere else. Right? Yeah, I agree with that, Alex. Yeah. Was that right, Sturritz? Reiki master? So anyway, so yeah, like you might find yourself a good little trend and stuff. I'd be more interested in why, and more often than not, it's going to be a move in some other thing, like there's a shortage of oil driving up oil prices. So they call that, wait for it, an exogenous shock. So barring an exogenous shock to the natural resource market, whether it's, most likely it's going to be oil-based. So I think CAD is more susceptible to an exogenous shock. But barring that, I wouldn't necessarily trade these two together. I mean, you could do it. I mean, look at this. It's a beautiful trade. My concern is there's probably just better trades. And remember, we're trying to do everything in Forex is relative, right? So the better you get relative strength versus relative weakness, the more money you're likely to make. Not that you can't make money doing other things, but relatively, you're leaving pips on the table because you're not matching strong versus weak as well as you possibly could be. Okay. Oh, looks like Jim's helping people. Thank you, Jim. Yeah, Jim's good people. Any other questions, guys? All right, I guess we're good. All right, so peace on earth. May the pips be with you. May our profits be above average. Have a wonderful weekend. If you're in my swing trading group, remember we meet in about 3 hours to go through trades for next week. We're going to look for trades that are somewhere between 150 to 300 pips. So, and if you're interested in joining the group, just go to fxbootcamp.com. And what else? Thank you for being a client of Trader's Way. We appreciate you and want you to succeed, and that's the whole purpose of these webinars. Click the Forex.Today logo to subscribe. Click on any of the videos. There's 4,000 on YouTube that I've done or are associated with. And have a wonderful weekend. See you next week. Thank you for your loyalty and respect. Cheers.